Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to another live stream. We're going to talk about commodity prices today and why they are on the verge of surging to new all-time record highs. We're looking right now at the chart of cocoa, now up to almost $10,000 per ton. You can see an absolutely exponential increase on this chart. Now, very interestingly, the previous all-time high for cocoa before this breakout here was way back in 1977. So there are some other commodities aside from gold and silver that were peaking during the inflationary environment of the 1970s, including cocoa. And yet now we're starting to see commodities break out. This might be the first one of a major trend of commodities taking out those previous all-time highs. Do me a favor, I made some adjustments to my audio equipment. I don't see a lot going on in the chat. Put a 1 if you can hear me loud and clear. It's always good to know that I am talking to somebody on these live streams. And we're going to talk today about what will be driving this bull market in commodities as we face a decaying domestic economy, a failing banking sector, a world on the verge of a major conflict. All of these factors will be contributing to the printing of trillions of fiat dollars, and that is very likely why we are going to see this explosion in both inflation and the price of real stuff, these commodities. So let's take a look at this. This is a tweet from Peter Schiff, and this is of the CRB Commodity Index. Peter here says, look at this chart of the CRB. Commodity prices are about to rip. This will likely be the biggest commodity bull market since the 1970s. By 2025, inflation will likely be in the double digits. First digit may not be a 1. Yeah, well, I tend to agree with this sentiment. And look at this chart. It is very bullish looking. I mean, you have, this goes back 5 years. You have the 2020 pandemic, weird lows. You know, for a while there, what was it? Oil was negative because they didn't have enough storage for it, right? The price of oil went negative. So, I mean, those 2020 lows, very strange. But since that time, we saw a big run up. Inflation, of course, in 2022 was peaking right around the same time as the commodity index. You know, that was when we were up at, 9.1% year over year inflation as measured by the CPI. So likely, in reality, much higher than that. But that was kind of coinciding with this peak in commodities. Now, since then, we've seen the disinflation narrative, Fed rate hikes, their attempt to bring inflation under control, and that has brought the commodities down into sort of a consolidation pattern. However, now we're beginning to see inflation tick back up, and the same thing with the commodity prices. Now, the thing is, with this pattern here, the previous resistance of this index, if we break through that, as I expect we will, that may become the support, and we could be off to the races for the next up leg in this major commodity bull market. I'm going to address a comment here. I do this sometimes in the chat. It says, I've been hearing silver will skyrocket forever. All you silver YouTube stackers are employed by silver. You all lie. Well, I'm not employed by silver. You know, I guess technically I'm self-employed. I mean, I get some ad revenue from YouTube and stuff, but they don't care what I say. They just want people to watch. And, you know, I'm not telling you or anybody to go out there and buy silver, buy commodities. I don't give financial advice. I'm definitely not a financial advisor. However, myself, I mean, I am positioning myself to benefit from this, not least of which is by getting hard assets, gold and silver. I mean, get exposure to other commodities too. I mean, personally, price of oil and other commodities go up, I will be in the green, at least in nominal terms as well. But look, I mean, if you've been hearing that silver is going to go up for a while, first of all, I've been saying silver and gold will be going up. Gold is at, let's look at the chart here, courtesy of SD Bullion, channel sponsor. Make sure you check them out if you want some hard assets. I mean, look at the chart of gold here going back to the 1990s. Gold is now taking out record all-time highs. Not in inflation-adjusted terms, but you know, you got to take out the nominal all-time highs before you take out the inflation-adjusted all-time highs. And if you've been hearing that silver is going to take off forever, I mean, first of all, I will say, sometimes people will tell me, oh, I've been hearing silver is going to go up for 50 years. Well, I mean, silver's had some pretty good runs in the past 50 years. For example, if, a couple decades ago you were buying in the 90s, could have ridden silver all the way up to, $50 in 2011. So you would have done well if you had maybe exited that position or maybe swapped some of it for gold. But now, I mean, yeah, silver has been down since that 2011 high. It's still very cheap, but I mean, look, the fundamentals have been huge for silver for some time, right? The fact that it hasn't broken out yet, I'm thrilled about because it's given me more time to accumulate more. Let me know what you think in the chat if we're lucky to have silver at the prices that they're at, or if you think that it's time to, get out of silver and it's never going anywhere. Right now, if you do want to get some silver, SD Bullion's got these good deals on these Una and the Lion bars. Any quantity pricing, the very nice, lovely bars. I showed you that in a recent live stream. One thing I want to look at here is their pricing on junk silver because, junk silver, I think, is one of these things that is just an unbelievable deal when the premiums are low, and they're pretty low right now. However, right now, SD Bullion has got this for $1.49 over spot, but you've got to buy a $1,000 face bag. Now, if you want to buy the smaller denominations, you're going to pay about $2.29 over spot. Now, that might seem small. It's not a huge increase from what we have seen, but it is an indication that the premiums on this stuff are starting to tick up. And I mean, I shopped around to many of the online dealers. This is basically the best price I've seen anywhere for $18.83 per $1 face value. But again, you got to buy a $1,000 bag. So I think that maybe we've seen the lows in the premiums for the precious metals, and retail investors from this point on are going to start getting into these. They're starting to wake up and realize how cheap some of these things are. And junk silver is one of those things that, I mean, all it's really going to take is one big money buyer to come in and, buy a couple $1 million worth of it, and they could clear out dealer inventories in fairly short order. And we know what happens. I mean, when that occurs, the premiums scream up. But anyway, let's take a look at the chart of silver, and then we'll move on to some of the other factors that are contributing to this surge in commodities. Again, that we're already witnessing. Remember the price of cocoa breaking out. Two previous 1970s inflation era highs. I mean, I suspect that we could be seeing silver chart resemble this somewhat in the near future. But maybe it's just me. Maybe I'm just a permabull. Again, I'm not telling anybody what to do. Now, this is a formation on the silver chart that we haven't really looked at yet. We've taken a look at the, excuse me, cup and handle formation that is forming on the long-term chart. But this is more of a consolidation pattern, a symmetrical triangle. And this is an indication that we are going to see a big move in silver one way or the other. I mean, at this point, this formation is not really bullish or bearish. It's just sort of an indication that a big move is coming. But you see you've got this downward trend line. This goes back to about 2020. And then this upward trend line here converging. Now, those two lines converge in February of 2025. So I suspect that we're going to see a big move in silver one way or the other, to the upside or the downside, before that time. So that gives us just under a year time frame to see this move. And of course, at any point, an event could occur which could trigger that breakout one way or the other. Let me know what you think in the chat. Give me a 2 if you think we're going to see a breakout to the upside out of this pattern. Give me a 3 if you think we're going to break out to the downside. It's always interesting to get the sentiment out there among the stackers. Now, here's an interesting story. One of the things that we had seen last week was we got the very dovish FOMC meeting, the dot plot from the Fed telling us that we were going to get 3 more rate cuts this year. And then on Thursday, there was some economic data that came out from the National Association of Realtors showing that home sales in February beat expectations. They went up something like 9%, I think, and it was expected that they were going to contract. So today we got this data that shows U.S. new home sales fall. Now, the reason this is important is that surge last week on Thursday that we got in home sales overall was a contributing factor to gold and silver selling off, markets in general selling off. The idea here being that, oh, home sales are back up, the economy's strong, consumers are strong, the Fed's not going to have to cut. Well, this data seems to contraindicate that to some extent, at least. The fact that new home sales are falling and the median price is the lowest in more than 2.5 years. So this kind of flies somewhat in the face of the data that we got last week, which had contributed to that decline in the price of gold and silver in markets. Something to keep an eye on, this economic data. I mean, it's like, we always get this great economic data and then it's revised lower later, or something comes out to contraindicate this. But of course, today, I mean, silver basically flat, gold slightly in the green on this news. So this is kind of par for the course. But eventually, I mean, all of the rosy economic data, I think, is going to be, recognized for what it is, which is just a smokescreen obscuring how hollowed out and weak this economy has become as a result of the central planning from the Federal Reserve. Now, one thing that could drive the price of gold and silver later this week, I want to comment on, and it's a reason that we really want to keep an eye on the silver price and the gold price in markets this coming Monday. This Monday is going to be a very important day, and it's possible that this weekend could be a critical one for markets moving forward, and we could see some strange stuff. So this is the economic calendar from MarketWatch. And if we go down to this Friday, one of the things you'll notice is we have the core PCE index. I'm trying to highlight that for you, but I have it in green here. This is an important measure of inflation that the Fed likes to keep an eye on. It's very important for Fed policy. It's one of their favorite metrics of inflation. Now, the forecast is that we're going to get a 0.3% month-over-month increase. The reason this is important, two things. One, Jerome Powell is scheduled to speak later in the day here at the 11:30 a.m. We're going to get some remarks from the Federal Reserve Chairman. And also, this Friday, markets are going to be closed because of the Good Friday holiday. So we get a key piece of inflation data, and we get remarks from Jerome Powell of the Federal Reserve on a day when markets are closed. So, they like to have these major things go down on days when, you can't get in there and make a trade based on the information. A lot of times, we see major events play out on Fridays and on Saturdays after markets are closed. Well, I have a suspicion that this core PCE index could rock the boat a little bit here, and also the remarks from Fed Chair Jerome Powell. Now, which way that could go, I'm not sure. I mean, if we get a really hot inflation number, that could be bad for markets because it might mean that the Fed, data dependent as they claim to be, may have some hawkish verbiage. However, I think Jerome Powell is aware that the market is already pricing in 3 rate cuts. If he fails to deliver on those, it could cause a massive market crash at this point, a massive asset crash, and I don't think anybody wants that during an election year. So there's also the possibility that we get, say, a inflation number that is in line with expectations, and then some very dovish commentary from Jerome Powell on Friday. I mean, time will tell. But this is definitely going to be one to watch, and I think it could be important. Now, I want to change gears a little bit and talk about one of these factors that is going to contribute to the soaring inflation and soaring commodity prices coming, because certainly Fed policy is important for that. That seems to be what everybody is focusing on at the moment. However, there are events going on the geopolitical chessboard far more important than what comes out of the mouth of Jerome Powell. So this is from a couple days ago here, the 22nd. Russia attacks Ukrainian electrical power facilities, including major hydroelectric plant. The attacks caused a fire at the Dnipro hydroelectric station, which supplies electricity to the Zaporozhye nuclear power plant, Europe's largest nuclear power installation. So, look, there's a tit for tat going on. We had this within just the past 3 days. Then, everybody's aware of the terror attacks now in Russia, which Putin is blaming on Ukraine. Now, look, everybody's going to have a take on what happened there. I'm sure, a lot of people will leave their comments as to what occurred, but the important thing here is that Putin is blaming this on Ukraine one way or the other, and that very well could mean further escalation moving forward. Now, also, this is not a one-way street. Remember, recently, last week, we had the U.S. urging Ukraine to halt their drone strikes on Russian energy infrastructure and Russian oil refineries, as reported here by the Financial Times on March 22nd. This was due to the fact that there's a risk of these drone strikes driving up global oil prices and provoking retaliation. Well, I guess that Ukraine didn't hear that warning, or they're completely disregarding it, because this is from today. Russian refineries targeted by Russian drones. And you can see there in the image from Reuters, smoke billows after Ukraine's SBU drone strikes a refinery amid Russia's attacks in Ukraine. So look, this is actually, okay, this is from an old video from March 13th for complete clarity there as I read this caption. But there are new reports of attacks on this Kuybyshev oil refinery in Russia's city of Samara, which has halted refining, knocking out some of its capacity following a drone attack over the weekend. This is according to two industry sources. So look, I mean, price of crude oil today is in the green once again. Was slightly higher earlier in the session, up over $82, still up over $1 today following these developments over the weekend. This is not going to change. I mean, unless a peace deal appears out of nowhere, which would be great for everybody involved, if you ask me, but I mean, that's just my take. We are going to continue to see this conflict escalate, and it means the price of energy, along with the price of just about everything else, going to be moving much higher. I mean, most of the other commodities, whether it be food or raw materials, have a component of them, an input cost in terms of energy. You know, if you're mining, you got to refine the metal, you got to run the machines. If you're growing food, I mean, there's a lot of petrochemicals, pesticides, herbicides. You got to use fuel to run the heavy equipment. There's all these inputs that are directly related to the price of oil and natural gas. And so as energy infrastructure in Russia comes under renewed attacks, that is going to mean higher prices for just about everything. And also, I mean, you know, this is another one from yesterday. Ukraine war, 2 Russian landing ships hit off of Crimea. So again, further signs of escalation. All of the munitions on one side of this conflict, at least, are basically being provided by the United States and by NATO. And this is leading to the printing of trillions of dollars. I mean, massive deficits being used to finance conflicts around the world. Don't expect this to end anytime soon. Now at $34.6 trillion in debt, moving much higher. And let's shift gears one more time here. And let's discuss the Asian theater, because it appears that escalations are well underway there as well. According to the Financial Times, U.S. and Japan plan to upgrade to security alliance. What's that for? Well, that is to counter China. Things between China and the U.S. getting pretty hot recently with the movement of troops, the acknowledgement of troops permanently stationed in Taiwan, some of its islands very close to the Chinese border. Japan and the U.S. tightening up their alliance here. Also, this was from yesterday. China has now blocked the use of Intel and AMD chips in government computers. This is causing a sell-off in the price of U.S. chip makers today. And you know what they say? When goods don't cross borders, armies will. So this is just another sign of the continuing escalation of economic warfare globally. And there's a real likelihood that this could evolve into a shooting war. I mean, I think anybody at this point who is in denial that World War III is already underway is, you know, either not paying attention, they're an eternal optimist, or they're burying their head in the sand. Pick what you want. But clearly, the battle lines are being drawn here. Shots have been fired in terms of sanctions and economic warfare. We've got NATO troops allegedly moving into Ukraine. We have got the Red Sea and in the Middle East. I mean, that's still just daily escalations, daily airstrikes. You're not even hearing much about that, but I mean, that continues, that persists. So all of this is going to lead to a lot of inflation. I mean, disrupted global supply chains, printing of money to finance wars, printing of money to finance economic stimulus in the U.S. Well, look, Bottom line is that pretty soon a lot of commodities may start looking like cocoa, and I want to get my hands on them before that occurs. Let me know what you think in the comments down below. Let me know what you think about all the stories we covered in today's video. Please leave a comment, smash that like button if you haven't done that yet. Consider subscribing to the channel, share it with your friends, and I will catch you next time. Stay safe and happy stacking, everybody.